Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from FOXO Technologies, and let me tell you, it's a bit like watching someone try to parallel park a rocket ship. It's messy, but potentially explosive. We are going to decode an 8K filing from FOXO Technologies. Now, an 8K is basically a company's way of shouting, hey, something important happened. To the Securities and Exchange Commission, the SEC. These filings cover big events, things that could affect the stock price or how investors see the company. This particular report is dated March 31, 2025. So whatever happened on or around that date. Keep in mind that companies don't have much time to submit one, so it's unlikely to be too late. The interesting bit here is Item 5.03, this is where they talk about changes to the company's rule book, specifically amendments to the Articles of Incorporation or bylaws. In simpler terms, they're tweaking the company's core documents. FOXO made an amendment to their Series D cumulative convertible redeemable preferred stock. That's a mouthful, right? Well, this type of stock is a special class of shares that has features of both stocks and bonds. They pay dividends like stocks, but they also have some bond-like features such as a fixed redemption date. Here's the key part. They removed Section 6(8), which was about an automatic conversion of these preferred stocks after 2 years from when they were issued. If they kept that clause, it could mean that the value of those shares would be considered a liability on the company's balance sheet like debt. By removing that automatic conversion, the company gets to treat those shares as equity, not debt. This might seem like a small change, but it has a big impact on how the company looks on paper. Now, why would they do this? Well, companies generally want to show as little debt as possible and as much equity as possible. Equity makes a company look more financially stable and attractive to investors. Debt, on the other hand, can raise red flags. Think of it like this. If you're trying to get a loan from a bank, would you rather show them a statement with a ton of credit card debt or one with a healthy savings account for a company? Now let's delve a little deeper into what this change means for FOXO. Essentially, by reclassifying those Series D preferred stocks as equity, they are trying to make their financial position look stronger. This could help them attract new investors, get better terms on future loans, or even just boost the confidence of their current shareholders. But it is always good, not necessarily. Some investors prefer debt over equity because it gives them priority in case the company goes belly up. Debt holders get paid before equity holders if the company goes bankrupt. Let's take a step back and consider FOXO Technologies as a whole. It is important to look beyond this single financial maneuver and assess the company's overall health and prospects. While this change might offer a short-term cosmetic improvement to their balance sheet, the fundamental challenges and opportunities remain. For example, if FOXO is in a high growth phase, attracting new investors could be crucial. Shifting the perception of those preferred stocks from debt to equity may make FOXO seem like a less risky investment, thus encouraging new investors to come on board. Conversely, if FOXO is in a mature industry with slowing growth, this move might be viewed with skepticism. Investors may wonder if the company is trying to hide underlying financial problems by manipulating its balance sheet. Okay, now for my take. While there's nothing inherently wrong with this move, I'd say investors need to look closely at why FOXO felt this change was necessary. Was it a strategic decision to attract more investment, or was it an attempt to mask deeper financial issues? That's up for you to decide. A good indicator is the financial tables in other reports. Check the company's future financial reports for any other big changes. Did their revenue or profits go up or down? Are they taking on more debt? FOXO's future success depends on much more than just this accounting trick. Keep an eye on their overall business strategy, their ability to innovate, and their performance in the market. Thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, don't forget to like, comment, and subscribe for more insights into the world of corporate filings and finance.